Hey everybody, what's happening? Google is one of the biggest tech giants in the world, and they released earnings for Q1 of 2023 a few weeks ago. The results? Way better than expected. The stock price jumped, earnings expectations jumped, everybody was happy. Google defied expectations and continued growing, even though at a much slower pace. Does this mean that Google is still a viable investment? Is it worth buying right now? This is what we want to answer in this video, so let's go ahead and dive right in. The first thing we want to check is what part of Google is doing the best. Looking at Google's revenues in Q1 of 2023, we can see that Google search and other advertising was up 1.9% to 40.36 billion. YouTube ads were down 2.6% to 6.69 billion. Google network ads were also down 8.3% to 7.5 billion, whereas Google Other was up 8.8% to 7.41 billion, mainly due to growth in YouTube Premium and YouTube TV. And Google Cloud was up 28.1% to 7.45 billion. Other bets was down 34.5% to 288 million. As we can see, the biggest chunk of Google's revenue continues to come from advertising. That's great because Google and Facebook have a de facto monopoly on digital advertising. The problem is that advertising is very cyclical. Cheap money in good times in the economy lead to more revenue from advertising. However, when things slow down, PR, advertising, that kind of spending gets cut first. We have seen the slowdown in the US and worldwide economies. We have seen higher interest rates. It's no wonder that Google is also seeing this type of ad revenue performance. On the bright side, the CEO of Google reported that ad spending was stabilizing. We are also seeing rapid growth in Google Cloud. Overall, Google's Q1 revenue increased to $69.8 billion, which is $1 billion above the consensus expectations and $1.8 billion above the same quarter last year. Earnings per share also came in at 1.17, above the consensus of 1.07, but below the $1.23 last year. The board also authorized additional stock repurchases of up to $70 billion. For Q1 of 2023, Google repurchased about 127 million shares, worth $14.6 billion, reducing total number of outstanding shares by about 1%. Google continues to have a massive cash balance of $115.1 billion on a long-term debt of $11.9 billion. Free cash flow also increased to $16.5 billion from $13.2 billion last year. Unfortunately, margins have dropped down a bit, with operating margin down to 25% from 29.6% last year, and net margin down to 21.6% from 24.2% last year. Again, that's just a reflection of the slowdown in marketing spending by most companies. This is stabilizing, so I am expecting higher margins later on in the year. In terms of guidance, Google's management did not provide a specific revenue or earnings guidance for the rest of the year, but they did share that revenues were stabilizing and they expected less headwinds in terms of foreign exchange. Now, at the earnings call, Sundar Pichai and everyone else from Google repeatedly stressed how important AI is as a strategic focus for Google. Currently, the main way for users to access Google's AI is through Google Cloud and the large language models that Google offers there. AI is also used in Google Workspace and in Google's cybersecurity offerings. We have Bard as well, but it's not really a paid product as of this moment. I think Google only released it to show that they can compete with Microsoft and OpenAI. AI is driving Google Cloud, and we are seeing a rapid expansion there, almost 30% as compared to the same quarter last year. AI obviously has other behind-the-scenes use cases. For example, Sundar Pichai mentioned Performance Max, which is a new way for advertisers on Google to optimize their ad campaigns. Overall, there is a lot of potential growth there, although I think we need to manage our expectations a bit when it comes to AI. Artificial intelligence right now is a massive buzzword, just like blockchain and crypto was 2 years ago. There is a lot of use cases for AI in the industry, obviously. However, the main problem here is how exactly do you monetize it? Large language models are amazing, but how are they going to be integrated into Google search? How are they going to make money? Right now, this is a big question mark. Bard, ChatGPT, these are essentially rivals to the search engine, and the search engine is Google's main revenue source. If Google doubles down on Bard without having a clear way of monetizing it, they're going going to seriously damage their main revenue driver. It doesn't seem like they have really solved this problem yet. Maybe I am being overly critical because, in all honesty, they did show a lot of new features at the recent Google I/O conference. It looked like they have found ways of monetizing AI search, but I think it is still too early to tell. The other AI features that they showcased were also very useful, absolutely. But again, the question remains of how will this translate to revenue? Is this going to increase or decrease sales? Aside from AI, Sundar Pichai also talked about YouTube at the Google earnings call. Now, YouTube appears to be slowing down, revenue falling 2.6% as compared to last year. That's not massive, but it is a decrease in revenue. That's not great. Plus, Susan W. left YouTube after 9 years as a CEO. The word on the street is that her departure is related to the issue of shorts. Obviously, TikTok is a massive competitor to YouTube, which is why Shorts were introduced, even though more channels are doing Shorts now. And Shorts are officially monetized as of 1st of February 2023. There are a lot of problems with them. Creators are reporting tiny revenues, much smaller than initially expected, and that's a problem. Low revenues for creators equal low revenues for YouTube. Worst of all, it means that creators may start abandoning the platform for better monetization elsewhere, changing content type or just changing their industry. Shorts also take away viewership from long-form content, which is where more of YouTube's revenue is coming from, so it actually ends up hurting the platform to some extent. Plus, the initial expectation was that channels could create a bridge from short-form content to their long-form content, but that just doesn't seem to work that well right now. In fact, there is hardly a bridge between the two. This is problematic. Shorts were introduced almost 2 years ago, on July 13, 2021, and they have generated over 5 trillion views since. Still, YouTube needs to do a lot more to make them viable for creators, if they can even do that. Just to clarify, I'm not saying that YouTube is dying or anything, but Shorts are a pain point that YouTube needs to figure out. Apart from Shorts, YouTube Premium and YouTube Music are growing at a steady rate. Users in the US can now watch the NFL on YouTube TV too. Google are also doubling down on making it easier to shop for products and merchandise on YouTube. There is a lot of growth on YouTube and a lot more potential, so the future remains bright. Overall, Google is as strong as ever, and the stock continues to be one of my favorites. There are a couple of things we need to keep an eye on, yes, but I personally don't see any major red flags. I am happy I doubled my position when the price was around $90–95, and I will continue to make my small weekly purchases. If we look at valuation, we are not seeing a massive discount in the ratio department. Trailing and forward PE ratios, both GAAP and non-GAAP, are in line with Google's 5-year average. They are above the sector median, which I am really not surprised about, since Google trades at a premium to the industry. The current analyst target price is $128.64, which gives us about a 10% upside in the next 12 months. Pretty much everyone is bullish, and so am I. The recent jump in price makes some people think that there will be a correction soon, but I think we may be headed back up to $130, maybe $150, unless we see some troubling macroeconomic data. However, inflation in the US is down, we may have hit peak Federal Reserve interest rates. This makes me think that the outlook for Google is bright. What do you think? Am I being overly optimistic? Are there any red flags with Google that you have noticed? Let me know in the comments below. If you enjoyed this analysis, please leave a like and comment below. Thanks for watching, and I will see you again in the next one.